Welcome to the Confident Entrepreneur Podcast. I'm your host, Jennifer Johnson. If you find yourself here, it may mean that you're looking for courage, clarity, or confidence in some part of your life. I interview experts in business and life each week and share strategies for success, motivation, and mindset. If you want to learn more about how I can help you grow your business as an extension of yourself and help transform you into a confident entrepreneur, check out my website, jenniferannjohnson.com. or join my private Facebook group at the Confident Entrepreneur. Now let's get started. Today, we welcome back into the studio Fernando Torres, and he is with Serro Taxes. Welcome back.
Thank you so much.
You were on our last podcast. We chatted about what's new for 2024 for taxes, and wow, I learned a lot.
Thank you. Yeah.
Now I want to know about business write-offs.
Okay.
Like everybody wants to know, right? What can I write off? What do I have to do to not pay taxes or get a refund?
Yes.
So what are some common business write-offs that we can legitimately take advantage of?
Sure. The first nugget that I want to give out is that one of the biggest strategies that I utilize is having each type of tax structure. So each tax structure provides you different benefits and different deductions. So for example, the C Corp, there's the S Corp, there's the single member LLC. Those allow you to write off different things. And so a lot of newbies into the business world, even people who are seasoned, they don't take advantage of this. They're stuck with one structure for their entire business life, and they're limited to what they can deduct. So for example, C Corp. The C Corp, I love the C Corp. A lot of people don't, a lot of CPAs don't, but it allows the business owner to deduct a lot of fringe benefits. So like medical expenses. I have a family and medical expenses can be heavy some years. I have a son who has eye issues. And so we have some out-of-pocket costs, things like that. There's a tax law that allows for health insurance reimbursement. I take full advantage of that. And so that's available to the C Corp for owners of the C Corp.
So I have a question about that. And this may be, I don't know the answer, but is it true that if you're a C Corp, an LLC has more, legal protection for the owner than a C Corp? Is that true or is that fictitious?
They're the same. It would be the sole proprietor. So if I'm Fernando Torres just working as a tax preparer, I don't have as much protection as if I was an LLC or corporation. So they both basically do the same. It's just how things are structured and how things are taxed. That's the difference between a corporation and an LLC.
And for our listeners who may not know, when do you determine what type of business you are?
So I would say the easiest structure is the LLC. So when you first start, you'll be that single member LLC. And it's the least expensive. You register whichever state you're in, and then maybe you get the local licenses and permits and all that stuff. Even if you're a home-based business, you still need a home-based license with the county or city. I would say that's the easiest because a lot of people treat their business account as a piggy bank. So as you upgrade to corporation, you need to be careful on how you withdraw money. So C Corp is the strictest. You can't take any money out unless it's a repayment of a loan or a payroll. So you can't do distributions from a C Corp.
Okay.
That's only available to S Corps and LLCs and sole proprietors.
Okay. Otherwise, you're basically just taking money from the company.
Yeah,
is how it's looked at.
Yeah. So you have your company. You let's say you have an LLC. You have your company, and you make $10,000 on a contract. That's pure profit. You can take it out of the business, but it's still taxable, of course, because taking $10,000 out for personal use,
of course,
is personal income. And so you have to set up systems. So so going back to your original question, when does it make sense to maybe change structures? They say usually around $40,000 to $50,000 of profit from an LLC that you should think about converting to an S Corp.
Okay, but not a C Corp.
A C Corp, I would say if you're trying to scale, especially if you're like an IT company, software company, somebody who wants to take in money from investors, they're going to want a C corporation.
Okay.
So, but if you come to me as your tax preparer and I know you're disciplined and you have family and you want to be able to write off most of these fringe benefits, I will push you to C Corp. but it's very rare. Most people who come in, they have to be trained and their mindset has to change.
Right. What other business write-offs are there out there that we may not? We know that, there's the meals and all of that, but what else is there that we may not be taking advantage of?
Sure. I think a big one is, like I said, I'm an employee of my C corporation and I get an achievement award. So that allows me to get a tangible gift from the business tax-free. It can't be cash. It can't be a gift card. It can't be a ticket to like a sporting event or to like Aruba or something like that. It has to be something tangible. So when you hear, I don't know if you watch movies or whatever, this is where I see it, where somebody retires and they get that gold watch. So that value for 2023 and 2024 is at $1,600. So what is an achievement? So it's probably, if you're in a manufacturing industry, if there's no accidents for a year, that could be an achievement. Or you're with the company for the year, 5 years, 20 years. The IRS actually has it within the publication when you can award this.
And you can award it to yourself?
If you're a C Corp.
If you're a C Corp, you can be like, oh, I had a great year. I'm going to go out and buy that Louis bag. If it's under $1,600.
Correct. If it's more, then it becomes taxable income, the difference.
Oh my gosh. So how does it work, now that we're on the subject, bonuses? Employee bonuses.
Okay.
They have to be put in their check to be taken out. You can't just give them a gift card. You can't just give them cash. Like how is that looked at? How does that work?
So another great deduction is gifts. I think people underutilize that. I use it all the time. I have multiple businesses, so I gift through each businesses, but it's technically at $25 per person per year. So when I know it sucks.
Oh my gosh.
Because people would take advantage of it.
Right.
And so if you give $25, that's tax-free to the recipient, the employee. If you go beyond that, then it becomes taxable, and you run it through payroll.
Right.
And so you're paying payroll taxes, and you have two options of the withholding. Sometimes, I don't know if you've heard people who get like $100,000 of a bonus or some type of crazy
I would
amount.
like that.
Yeah. I've heard people get big bonuses, and I'm astonished because it's more than what I make.
Wow.
And so there's two withholdings. So there's a bonus withholding, it's usually 25%, or you can just use the regular tax bracket that they're in. But usually people will take the bigger portion because they might owe more with this extra $100,000 plus their regular W-2.
So what are the benefits of taking some of these write-offs?
Of course, it's comfort of lifestyle. So like I said, for me, I'm paying for, the business is paying for my health insurance and my out-of-pocket medical cost. So I don't have to take that as payroll. So I'm saving my company 7.5%, and then I'm saving myself 7.5%. And then also that income is also not taxed, because let's say I need to make $10,000 to pay for my out-of-pocket health insurance. That's going to be taxed, and then that's going to be reportable on my tax return. Okay. So you're potentially paying two taxes because
double taxed, right?
Yeah.
Wow.
So I think just knowing knowledge is power.
It is.
And so that's what a good CPA should do is provide you with that service that they know and can help you with the write-offs.
Is your closet overflowing? Or maybe your kids' closets are as well. Or maybe you just want to redecorate your house. If you're looking and wondering what to do with all the stuff that you've accumulated, bring it all to True Fashionistas, or even ship it to them for free. They will sell your unwanted items for you and take away all the hassle by doing all the work, and all you have to do is sit back and collect your money. You can reach out to them online at truefashionistas.com, or come into the store or check them out on Facebook or Instagram, and that's truefashionistas.com. Welcome back, friends. We are back in the studio with Fernando Torres from Serro Tax Services. Did I say that right?
It's zero taxes. There's
zero
no
taxes.
No
services.
No services.
Zero taxes.
Yeah, it's all the DBA.
All right. We're talking all about write-offs today. And I find it very fascinating just because, it's the way to save money. It's the way to not avoid paying taxes, but to get more bang for your buck.
Yes.
I guess. So how can businesses maximize their write-offs?
The biggest thing is understanding what their tax structure allows them. So
Which is what, that S Corp, C Corp?
Yes, C
Okay.
Corp, yes. And utilizing your CPA. I think the biggest misconception is that when you hire a CPA, that they're going to do everything for you.
Mm-hmm.
You have to communicate with your CPA. What are you going to provide me for this fee? So if somebody comes to me at the end of the year, I'm assuming that they're going to use me just for tax prep.
Right.
But I'm available all year round for tax consultation. So I think that's the biggest thing to help a business get to get systems in place,
Mm-hmm.
and to utilize somebody else's expertise to help you with deductions.
And I think I totally agree with that, because, back when I started my company, that's what we thought of our accountant was, oh, well, they're the one time a year to do our taxes. But the more you get into your business, the more seasoned you are, the more you realize how beneficial having that meeting maybe once a quarter. How often would you suggest? Because I know that's important.
Sure. Yeah. So I want to do quarterly. It's really tough because I've had a growing company. And so you just get bogged down with the accounting, and then you get late clients and you do catch up work. And so it's just an endless cycle of more and more work, because if you do a good job, you're going to get referrals, and you're just going to naturally grow. So my goal for 2024 is to do quarterly, and a good CPA should be doing quarterly as well. If not, at least once a year. That's definitely once a year.
Right.
Hopefully by the fourth quarter.
Once a year, but not the once a year do my taxes. So you're really seeing them twice a year.
Yes.
Essentially, if you look at it that way. Do you have some tips for our listeners how they can keep track of the write-offs that they're doing?
Yes. So I usually recommend, if they're a small business with 20 transactions or less, just print out your statement and then write next to it what it's for.
Mm-hmm.
So you have a check, for example, check 1234. The IRS doesn't know what that is. They don't have a copy of the image. But if you can write it, it was to John Smith for repairs and maintenance of your office, something along that line. And then I would say once you get beyond 20 transactions, you can use a program like Sage, QuickBooks, Wave App, Zero. I think there's a few more. That's probably the best. So as you grow, you want better systems.
That makes complete sense. Okay, this is a big one for our listeners, because I know everybody has this on their mind at some point, and they're all freaked out about it, because I would be too. How, as a business, can you prevent being audited, or can you prevent that?
Sure. I would say first, don't DIY if you have a business. Second, don't go for the preparer who says they can get you the biggest refund. Being in the Miami, Fort Lauderdale area, there's a lot of fraud. And it's already known that Miami, Fort Lauderdale has a lot of financial fraud. Mm-hmm. And so I picked up clients who've dealt with these poor preparers. And what they do is they promise the world that you can deduct 100% of your home, 100% of your car. Basically, anything that hits your personal piggy bank is going to be tax deductible. So just stay away from those people. Reviews, people can fudge with reviews and things like that. Just ask a friend, family, whatever it is, another business colleague, maybe join a BNI or Master Network, something like that. And you'll have somebody reputable to help you prepare for that tax return.
Yeah, because otherwise you're opening yourself up, I'm sure.
Yes. And so that's the first step. And then the next, everybody's going to say it again, documentation. Mm-hmm. As long as you have a box where all your expenses are, that's fine. I'll take that any day. And the problem is when you need something, those receipts become faded over time. So I don't know if you've kept receipts over years, they become faded. It's just the type of paper and the ink that they use. And so that's why having the bank statements there within all one pile will be great in case something happens and you do get audited.
So what do they do about that? Sorry, the time faded the thing. Yeah.
So hopefully you still have your bank statements, because if you pay cash, your receipt is your defense.
Right.
So what happens is if you can't defend your deduction, they will usually, and if it's something that doesn't look like it's business related, they will definitely put it in as distribution. Mm-hmm. And then if you have a C corporation, then that could be a dividend, and you're going to pay the dividend tax, which could be a mess.
What is dividend tax?
So the C Corp pays the tax of any profit. So how do you take the profit out of the business? You have a loss the following year, or you do a dividend, which is depending on the time frame of the earnings, it could be taxed at your taxable income rate, which right now the highest tax bracket is 37%, or long term, it could be either from 0, depending on your income, all the way up to 20%.
But if you are an S Corp or any other, then you pay your taxes as your business personally. Is that correct?
Correct. Yeah. So you're going to get a K-1 from the business showing your profit and your distributions and anything else that's taxable. And then you put that on your personal tax return and it spits out whatever tax liability or refund you get.
I see. Interesting. Is there any other tax information that you wish your clients or future clients knew? What do our listeners need to be enriched or enlightened on from your world?
So I would say if you're going to DIY it, the proper publication, the proper source is big. So are you reading articles from, let's say, Accounting Today, CPA Journal, maybe from another reputable CPA? Are you just Googling because you see TikTok videos? I hate TikTok videos.
Oh my gosh.
My client sent me, hey, is this something that you can do? And so TikTok videos is 15 seconds of the sexy write-off. How the Augusta Rule. Like you can rent your.
What is the Augusta Rule?
So the Augusta Rule is it became because of the wording came from the Masters tournament. It's a golf tournament. So you have all these beautiful homes around the golf course, and people were just renting it out for the tournament. So if you rent your house out for, let's say, $5,000 a night for 14 days or less, that's actually tax-free income to the owner.
Wow.
So yeah, there's like I said, there's great tax loopholes. It's just you just have to know where to find it, who to trust, and be able to apply it so that you're not taxed.
Right. Wow. So that's a really good nugget. What else?
Let's see. Oh, sorry. What was the original question?
What in your world, what do you wish that people knew?
Okay. So a reputable source, don't listen to TikTok or Instagram.
The fake news.
Yeah. Utilize an expert early on. I know I do the same thing. Something happens. I have a runny nose. My throat hurts. What do? We go online first.
Oh, Dr. Google.
Yeah, Dr. Google. And then it gets serious. Then, we go to the doctor, urgent care, or whatever it is. As a business owner, you specialize in whatever you do. You're a plumber. You specialize in that industry. Go ahead and start delegating. That's how you're going to grow your business. But, if you want to be that person who just has their own business just for lifestyle, you don't want to worry about staff, you don't want to worry about anything, then, like I said, make sure you use the right publications, the right resources.
Right.
That's right. Sorry, go ahead.
No, that's a great tip. Yeah. You're right. Because TikTok, everybody becomes an expert, right? And nobody really knows. And what can you tell me in 15 seconds that's going to grab my attention that's really going to be legit?
Employing your kids. So that's one that's been going around.
I have heard. Yes. That you can pay your children up to a certain dollar amount.
Correct. Yes.
It's 13.
Yes. The standard deduction rate, I think, is about 13,000 now.
Is that true?
Yes, it's true. You just have to do it the right way, though.
Okay.
So I know we have 15 seconds,
but
they have to be on payroll, a legit payroll service. Or if you do it by hand, you still have to do the 941s, W-2, W-3, all that fun jazz stuff. So
got it. But you can pay your child.
Yeah.
Very cool. Well, Fernando, if our listeners would like to get a hold of you, how can they do so?
Sure. My email is info@serrotaxes.com, SERRO. My cell phone is 954-999-2300, and you can text me, call me.
Fabulous. It's been great having you on and learned a lot of information about taxes.
Good. Thank you so much for having me.
Absolutely. And thank you, friends, for joining me today and every week here on The Confident Entrepreneur, brought to you by True Fashionistas. If you want a deeper dive or you would like to learn about my online business courses that can help you with your small business, head to my website, jenniferannjohnson.com. Have a fabulous day.